The S&P 500 is coming off its best week in over a year after last week's explosive moves following the presidential election. The question now, of course, is what does it all mean? We're going to answer that today. And so why did the market rally this much? Well, the market was satisfied because we got a clear winner. And so now we can move on. But as market participants, we know that certainty is never final. So it's always about what happens next. So the first thing we have to realize is that the market was up 4% last week. So let's look back at the last few times that has happened to get an idea what to expect over the next few weeks. So as we know, again, up 4.7% last week, the best gain since this rally began near the October-November low of last year. As we can tell, we're looking at instances going back to 2020, and we can see that this happened in a number of different scenarios. Clearly, near key market lows, again, October 2023, October and November 2022, and the COVID lows as well. Now, we also saw occurrences during the 2022 bear market because, as we know, we get the biggest gains and losses both on a daily and weekly basis during bear markets. Emotions run high, and those result in exaggerated moves on both sides of the tape. We can also see that we had a number of them occur as the market was moving higher, as this uptrend was extending in late 2020 into 2021. That, of course, is interesting and comparable to right now because even though it was the biggest gain on a weekly basis in a year for the S&P 500, we still had two other 4% advances on a weekly basis just recently, right after the August low, right after the September low. So we basically had a cluster of 4% moves just over the last few months. And again, in an uptrend that's been in place for a while, as this one was as well. Now, what's interesting about this chart is that there's one scenario that does not appear. That is a 4% week marking a key top of a long-term uptrend. Now, again, we can see here that there were times in 2022, as the market was moving lower, that 4% rallies couldn't be trusted. We know that. But things were much different. The market was rolling over, it was underneath all key moving averages, and there was no bullish patterns to be had. We know that's very different right now. And so could this change everything? Could it be the first one in a number of years where a 4% weekly move marks the top? Anything is possible. We just haven't seen it. So again, it's all about what happens from here. But as of right now, there's nothing to suggest things are about to roll over completely. And so the move also has put the S&P 500 back to the top of the weekly trading channel, which we showed recently. This encompasses 2 years, and just over the last few weeks, we had noted that I was getting close to the upper threshold of this channel, and the October pullback resulted. We know that that was relatively short-lived, but again, marked a key spot to at least expect a pause. So now we start this week after the S&P is now above that line once more. And now as we know that just getting above that line or through it doesn't necessarily mark or guarantee a top. As we can tell from the previous times here, it is proven that it can rally near or stay near that line before a bigger pullback has happened. But we know that the biggest retracements have started after the S&P has gotten back to that line at some point. So the question is, can this exist without a bigger drawdown happening right now? Well, as we know, because this trading channel is moving higher, there's a certain rate of change that the S&P has to match in order to stay next to the line. So if we just move sideways, if we don't match the type of 4% move that we had last week, in essence, the S&P could still be near the line or even under it as the upper line continues to move higher. So I don't think anyone expects a repeat performance of last week. So the best case scenario, as usual, after a big move like that, is to see some sort of digestive action that eventually results in bullish patterns that we can take advantage of going forward as well, which we'll cover at the end. And so we can also look at a shorter term trading channel. And that is this one, which encompasses the action from mid-July all the way to now. As we can tell, upward moving, but along the way, oscillating between the highs and lows of the channel, which we are again up at right now. So if we go back to the previous chart, remember where this is, right? It actually lines up with the upper part of this bigger channel. So best case scenario, as we've seen here, for most of 2024, we have been oscillating in the upper half of this channel. So simply continuing to do that would keep us in this channel as well. Again, I would be surprised if we just blast through the top of this channel and the other one without any sort of pause. That would really be a blow off top. Best case scenario, again, is if we digest this a little bit more and then still trade within this channel into the end of the year. And so S&P 500 versus its long-term moving averages. And so we like to talk about this in terms of the 13-week, 26-week, and 40-week moving averages. As we know, those signify 1 quarter of action, 2 quarters, or half a year. And the 40-week is basically the same thing as a 200-day moving average. And so what happened last week when we got that big 4% move, the S&P 500 bounced off that shortest 13-week moving average and moved higher. We've highlighted here all the times that has occurred since, again, the lows from March 2020. And going back to the beginning stages of 2022, we haven't seen a lot of these. In fact, only happened 2 other times. This was in May. You remember we had the pullback in April, a little bit of a pause in May before things really took off again. And it also happened in the middle of the second quarter of 2023, coming back from the pullback from the regional bank crisis as well. And each one of those times produced some strong moves in the ensuing weeks. We go back to 2021 as well. And this is when things were really an inconsistent uptrend, where the S&P was trading above all those moving averages and each one of those trading higher for a good amount of time. And we can see that numerous times, any one of these pauses came back down, hit that 13-week and bounced and continued higher. Now, when things change, when momentum slows, we get to see it here because we know as things started in 2022, big decline, and then that just changed momentum completely. Didn't really know it until the initial bounce failed, which produced this, right? Those moving averages became resistance, and then they started to roll over. And the worst case scenario, of course, is when you have the fastest moving average, 13-week, below all the other ones. They're all moving lower, and they act as resistance for the S&P 500, right? So there's a number of steps to go before that occurs. That's how different things are right now. And looking at a short-term moving average now, the 20-day, the S&P rallied back above it. No surprises with the big move. And don't forget, though, we started the month below the 20-day moving average, gapping below it as October ended. And that was very reminiscent of what happened in July into August. Remember, we had the downturn from the July highs, the gap lower, and the initial bounce to end July to begin August failed at the 20-day, and that led to those big 3 days down and the biggest volatility events that we've had in 2024. And again, leading into the election this year, where everyone just anticipated a lot of fireworks and there was a lot of uncertainty, as we know, there was a group of people believe that same thing could have happened. And we don't know if the results were different. They could have happened, but they didn't at this point, and now we're above the line. So we have to look at how far we are above that 20-day moving average, and that comes out to about 3% right now. And going back to May, it didn't really get too much more above that, hit almost 4% twice here before seeing a pullback, or at least a pause. So that wouldn't be surprising once more, where you're getting close to the upper edge of that. And, we talked about a lot of times how that results in hitting the top of a Bollinger Band, so forth and so on. So just on that perspective, short-term extended above the 20-day moving average, what could change that? Just moving sideways could help. And that will help the 20-day moving average to catch up as the S&P 500 catches its breath. And again, digest what we just had, which was an historic week last week. So looking at long-term momentum, we use the 14-week RSI from that perspective. And it's close, but we still haven't gotten that weekly overbought level or daily overbought level just yet. And a lot of people are looking at this and saying that this potentially is a negative divergence in weekly momentum. And it could be, but if we looked at that and use that as our gauge to be bullish or bearish, of course, it would have been the wrong thing to do, because the price action continues to do better than what the indicators suggest that it should. But we can't ignore what's going on, because at some times in the past, it has worked out and helped us, because in 2021, as we know, the last new high that we got at the end of the year was not confirmed by momentum. There was a lower high in the RSI, did not get overbought, That, of course, was very prescient and led to, or at least gave us an indication the momentum was slipping, which of course resulted in the S&P eventually rolling over. But in 2019, same thing. We had higher highs here in the springtime. In the summer, we had lower highs in the RSI that didn't result in anything more than just a hiccup as the market continued higher and rallied strongly into the end of the year. Even in 2017, generally accepted as the most persistent, non-volatile uptrend that we've had in history, has some negative divergences along the way before it got a little out of control in the fourth quarter there. And of course, that happened in early part of the year, in the middle of the year, negative divergence in the 14-week RSI. The market continued higher as well. So again, keep this in the back of our minds. But for the most part, as long as the market continues to move higher, taking advantage of digestive action and breaking out, of course, that's the most important thing. Now, short-term momentum, we talk about this chart a lot, 14 period RSI and a 2-hour chart. That has slingshot all the way from being oversold as we ended October to now overbought for a few days, with the market rising about 5.5% from the low. And again, looking back at the last number of rallies that we've had over the last year, hasn't really gotten too much more than that. The big aberration, of course, when we had that huge 10% rally off of the August lows before things pull back once more. But that being said, as we can tell from this lower chart here, being overbought hasn't stayed around for that much either, at least according to this very short-term chart. So wouldn't be surprised to see this then come in once more, maybe come back down to the 50 zone or even lower, just as the market pendulum, goes from one side to the other. And really, this is just about the normal ebb and flow of an uptrend. As we can tell here, this is 12 months of action that we can see on a 2-hour chart, which I think is pretty cool, that we can see all the twists and turns along the way, where it seems like we're going straight up, but as we know, there has been a lot of back and forth movement along the way. And this really captures it very well to see that after a 5 or 6% rally, it would not shock anyone to see momentum slow at this point, regroup, and then maybe, take it higher again once more into the end of the year. So long-term patterns then, right? We've covered all the other aspects at this point. So we have one more long-term price target to be acquired, and we know what it is, 6,100, right? It's been in place since the breakout in January. And as we can tell, getting closer to it, got to about 1.5% at the highs on Monday as well. So that's still out there. That continues to be, the target right now. But again, it's what happens in between getting it is what we always talk about, is how we can actually get there, right? And so recently, just achieving another target from a short-term perspective was hitting 5,900, which the S&P, gapped up to and then through as the reaction to the election happened last Wednesday. This has been in place since the breakout from September 19th. So that's one additional bullish pattern achieved. In fact, it's the 10th one that's happened since we started to rally about a year ago. We've been tracking these all on the way. Each time that the market has paused, sometimes taking longer than usual to get there, but eventually hitting another upside target. So we're going on 10. Could we get 11? Well, 11 would be hitting 6180. Now, that could change. This still could take a little bit of time to get achieved because it's still trying to get through 6,000. Now, could we get another bullish pattern develop even before achieving this one? The answer is yes. And in fact, that's the last part of this, because it all boils down to what the next pattern looks like and how the S&P 500 could take advantage of it. Because taking advantage of bullish patterns, sound like a broken record, of course, is the crux of an uptrend. And so in terms of potential patterns, if the S&P does pause over the short term, this could result in a potential bullish flag pattern, maybe a bullish pennant, something that develops after a strong move for a number of days, takes us time to pause for a few days, and then rallies higher. We've seen that happen before, of course, as well. Now, maybe it could take longer than that. If it does, then we'll look for something like this to occur, which is always the type of blueprint that we'll look for. As we talk about with any type of uptrend, right? It's always about the first thing, making a new high, is what does the ensuing pullback look like? We want to get a pullback, of course, just for the next bullish pattern to be formed, and that comes in having some sort of higher low in place, which is then the beginning stages of a bullish formation. And that's what we'll be looking at over the next few weeks. We'll be in touch along the way. Don't forget to check out these videos and subscribe, and talk to you next time. Thank you.